As Nigeria intensify efforts to boost domestic revenue through sweeping tax reforms, an important question is taking center stage. Can the country strengthen tax compliance without weakening the non-profit organizations that deliver essential services to millions of Nigerians? From education and healthcare to humanitarian response, governance, human rights, and community development, civil society organizations continue to bridge critical gaps where government resources are often stretched. Yet, many of these organizations now say they are facing growing tax obligations, regulatory uncertainty, and significant financial pressure. To explore these concerns, policymakers, tax administrators, development partners, professional bodies, and civil society leaders gathered in Abuja for the National Policy Dialogue on Non-Profit Taxation convened by IdeaPlus Foundation. At the event, the foundation unveiled a landmark research report titled Compliance or Constriction, an evidence-based study examining how Nigerian Revenue Services tax drive is affecting the sustainability of civil society organizations. The report presents new findings, sparks critical conversations, and calls for a balanced approach that protects Nigerians' revenue ambitions while preserving the vital work of non-profit organizations. Here are the key highlights from the dialogue.
Your presence here today demonstrates our shared belief that complex public policy issues are best addressed through evidence-based dialogue and collaboration. Distinguished ladies and gentlemen, as Nigeria pursue fiscal reform, the government is placing greater emphasis on strengthening domestic revenue mobilization and improving tax administration. At the same time, non-profit organizations continue to contribute significantly to education, health, humanitarian response, governance, community development, and many other areas of our national lives. Nigeria needs both. We need a modern, efficient, and trusted tax system, as well as a strong, accountable, and sustainable public benefit organization. Our challenge is to ensure these goals support one another. This is why we are gathered here today.
The second was also a casual conversation with the director of another organization. This second organization had also been approached, had gone through tax audit, and had been slammed over 100 million in respect of outstanding taxes. And so he was also concerned, but his request was, please, do you know anything about the tax appeal tribunal and how to engage them? The third was more close home. So I volunteer with another organization and I chair the board. And so I woke up one morning and I received an email that has been forwarded to me indicating that 37 million naira had also been slammed on the organization, in respect of outstanding taxes. Combined, all three comes to almost 300 million. For anyone that understands the workings of civil society groups, I doubt that there are many organizations that can afford 100 million naira or even have 100 million naira sitting in their reserve.
Secondly, you find a certain organization where the finance team within their structure, they don't have an assigned staff for taxation. They don't have somebody whose role is to sit and make sure that deadlines are kept. We observe the deadline and we remain as at when due. Thirdly, we have situations where one man carries through the whole process in the finance. no segregation of duties. Is the one that we sign, we write the voucher, we do this, and he cover us for zero.
However, the activities of the CSOs and NGOs should naturally fit into the law of the land, if you agree with me, one of which is the tax law. So, you, of course, as you do your social services, you don't want to run foul of the tax law, and that is why we are here, I believe. In doing that, and from my little experience with dealing with the NGOs, they need to also have people that have an understanding. It may not be a big audit, a big accountant they're going to get, but at least somebody that understands what tax obligation. Now, I'll talk a bit also about the VAT part because also revenue generation. The VAT self-charge is more like saying discourage those who are not in the tax net, push them back. But to me, I think there's still a pain for those who are having to go through that VAT self-charge. So if an NGO, apart from your normal VAT that you bear on your services that are vatable, apart from the obligation for withholding tax which you do on behalf of government, now you have to do another one of withholding VAT, charging yourself VAT on behalf of government. So I believe that government should look at this and see how best NGOs will be able to face their call, be able to be compliant. Cost of compliance actually may be more for them because they have not been factoring this cost into their budget and planning. But if they've been doing that before, it will be new. And then the other bit about it is that they need to also strengthen their governance, because this is necessary. If the board knows that tax is we used to call it ignore taxation in accounting, but nobody ignores taxation now. It's now the big elephant in the room. So in the boardroom, tax matters should be the forefront of what is happening because it will bring down even organizations that are for profit making. Tax matters will bring that. I think with this, we can actually get some leverage while revenue is at focus. Then the NGOs are also, or the civil society groups are also being able to do their work effectively.
Make it such that it's simple, easy, that you don't even have to be an accountant, you don't have to be an auditor, you don't have to be anything for you to understand what is required of you. Now, some things have been said here. For those that are not accountants, they may find it a little bit maybe hard to comprehend. And that is the difference between exempt, between zero rated. There are two different things and they require different approaches. There has also been discussion about self-charge. Personally, I see that as a way to, I don't know, but while the tax authority know what to put it that way, I don't see that. For me, I see that there's tendency that somebody, there's double taxation there. Yes, because you may have been presented an invoice that you self-charge, and when you go to the vendor himself, you may maybe ask him to pay because he did not charge VAT on the invoice. So there's tendency that there is a double taxation there. So personally, I think the issue with self-charge should not be there. Already, withholding tax is already being paid. There's additional requirement which is value-added tax. It should be come and play. It's either you are paying or you face the consequence. Not putting another consequence on somebody else who is supposed to be, who is already compliant probably with the withholding tax provision. You're now putting additional requirement body on that same person who has already deducted withholding tax. Just because the vendor did not put it, you are now putting the burden on him to also self-charge.
Follow, like, share at Media 360 Impact for credible, people-centered reporting. follow, like, share at Media 360 Impact for credible, people-centered reporting.